This week, how inflation, the national debt, and monetary policy will influence reverse mortgage lending in 2024.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Recent economic news, well, it's been a mixed bag. First, the good news. The U.S. gross domestic product, or GDP, increased at 3.3% annualized rate in the fourth quarter of 2023, fueled in most part by consumer holiday spending. Regardless, the GDP has exceeded economist expectations. The bad news is that January's inflation report shows that consumer prices rose 3.1% from 1 year ago, and that pushed down the Dow Jones Industrial Average over 700 points last Tuesday, and it closed down by 525 points by the end of the day's trading. The inflation report undermines investor expectations that they had with the Federal Reserve cutting interest rates several times this year and as early as this spring. And higher than anticipated inflation also led the 10-year Treasury yield to jump 15 basis points last Monday. But when investor confidence is low, bond prices increase and yields fall, as there is more demand for a safe investment. Consequently, HECM professionals have seen a modest erosion of their gross loan proceeds for new HECM applicants, especially in the first few weeks of February, with higher expected rates reducing HECM principal limit factors. And this comes after the 10-year constant maturity Treasury rate fell from a high of 4.98% in mid-October to a low of 3.79% by the end of December. Yet larger economic forces are likely to present headwinds to any significant drop in Treasury rates. The San Francisco Federal Reserve Bank's report, entitled "The Long-Run Fiscal Outlook in the United States," sounds the alarm on the national debt and also its long-term impacts on interest rates. The U.S. federal debt is now roughly as large as the country's annual GDP. A high and rising ratio of debt to GDP not only raises government borrowing costs, but also risks pushing up long-term interest rates. In addition, investors that are purchasing treasuries are likely to demand a higher return as federal spending continues to surge. The greater the perceived risk, the higher the rate. Also, 10-year treasuries expose the investor to longer-term risks, chief among them inflation, as the return on the investment could be lessened or even erased by inflation in future years. Now, the last time that our national debt was nearly as large as our nation's GDP was at the end of World War II as a result of, yes, defense spending. The debt to GDP ratio fell steadily from over 100% in 1945 to a low of 25% by 1975, thanks to economic growth that exceeded our interest paid on the national debt. Now, without a significant reduction of the interest rates, it's likely that the U.S. debt will continue to grow, and that will push the debt ratio even higher. That, and in both parties of Congress who are continuing to spend like there's no tomorrow, pushing our debt to record highs. Now, this doesn't mean that Treasury rates will not retreat this year. However, there are considerable hurdles to any sizable reduction in the 10-year Treasury rates due to current market conditions. Now, that said, we continue to see modest fluctuations in interest rates with future releases of economic data. The question this week is, where do you see the 10-year CMT going in 2024? Do you think we'll see a market reduction? Will it bounce around about 4% throughout the year? Let us know your thoughts in the comment section below. And also, if you'd be so kind as to share this week's video with others, you can do that on LinkedIn. Don't forget we have a YouTube channel. Be sure to subscribe and hit that notification bell. That way you never miss an upcoming episode. And each and every week, we bring you the latest reverse mortgage news in the nation's only weekly reverse mortgage news podcast, HECM World Weekly. You can now catch us on Spotify, and of course, we are always on Podbean and Apple Music. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World. Make it a great week.